Yo, what is up? I'm super hyped. I can barely contain myself. But
Yeah.
what's up? This is your boy, JT Joshua Taylor, founder, host of Break Into the Future. I got my guy here. We just met, I don't even think a week ago, but we're like buddies already. Zachary Roth. You hit me
Uh,
up. I love it. What's up, dude? How you doing, man?
I'm very good. It's been a great day.
Nice, man. Where are you? Where are you in the world?
I'm in downtown Chicago and it's pretty hot out, so I'm staying inside with the AC for now. But it's the July 4th tomorrow, so we got fireworks all today, all tomorrow.
Yeah. Summertime shy, man. I love July 4th in Chicago.
Have you been to Chicago? Have
Huh?
you been to Chicago?
Yeah, I was there like 2 weeks ago.
Oh, I think you mentioned that last week, actually.
Yeah, like June 12th weekend.
Mm-hmm.
Yeah, that I was there. One of my friends graduated from business school, University of or Northwestern Kellogg. So if only we would have known each other.
So was he in like the MBA program or anything?
Yeah, full-time MBA program. Yeah.
Really? Because I had like a part-time job that I don't anymore that I was just doing on the weekends where I was like bartending on these boats that go on the Chicago River, and we had the entire Kellogg School of Executive MBA graduates all celebrating, and they got pretty hectic.
I'm sure. Yeah, MBAs can be a little rough around the edges.
I was interesting that most of them were not in finance or like banking or anything. They were all just doing their own thing, like more like some of it was like psychology, some of it was technology or tech stuff. One guy was in the CIA, so I'm curious what he's going to do.
Yeah, what his real name is.
Yeah, he looked intimidating.
Yeah, I'm sure. That's cool. That's cool, bro. Yeah, man. Just tell the people who you are, background, anything you want to share, and how you got to go down the black hole of crypto, man. We can just get into it.
Sure, yeah. So I got a music degree from DePaul in Chicago in 2019, and then shortly after, so I was never really super invested in investments during college. Unfortunately, I wish I was, but I was paying attention to Bitcoin in like 2017, but I was mainly just watching it from the outside and like observing just the volatility of it. And I was not really experienced even in equity markets, so I never would even think about going to like crypto or Bitcoin altcoins, etc. At the time. But I've since shortly after graduating, I realized that I really wanted to get into finance. Like my brother's a market maker, so I'd always been around trading. Mm-hmm. I've always understood like just the market structure and mechanics of like derivatives and things. Mm-hmm. So I got really into that, and I started going down the CFA route. Started studying for that. I'm still planning to take it, although I do kind of see a little trouble in the future for like we talked about, some of the content might be somewhat obsolete when you think about how it's all structured around that risk-free rate, which is so impervious. But so then I started going down, just like crypto had been in its bear market at the time I started paying attention. Unfortunately, like I didn't start investing at that time as much as I should have, but I was just watching it with the newfound perspectives that I had from the CFA curriculum. And I was just applying those to this new field, and I was just picking up on it super quick. And I feel like I never had a problem accepting the technology. Like I understand it's an unproven technology. Like if you look at Apple, the stock, someone made this argument on a podcast. I forgot who. It was probably on Bankless or something. But the stock itself from like the 80s until like 2007 or whenever the iPhone came out, or 2009 or whatever, it was an unproven technology, and nobody really knew. Mm-hmm. Like they were the underdog at the time. Like now we can't even imagine that. Like they're this $2.5 trillion company. Like we can't even imagine this. But at the time, like there's that commercial from the 80s where they have like everybody all looking the same and being the same. But then like the Apple commercial on the TV. I don't know if you know what I'm talking about, but they just tried to position themselves as the underdog. Mm-hmm. And so they had just massive volatility for a long time, and like the market never really understood how to value Steve Jobs, and they didn't know like he was volatile himself, you know,
Yeah.
and he's like the centralized like demigod in the center of all of it.
You have a comparable comp for today's age. I think you know who I'm talking about.
Are you talking about Elon? Yeah, Elon. You're right. I think they're both. I bet Steve would have been a huge troll if he was given the chance.
Oh yeah, he was always loud, always saying like. I remember when Google tried to come out with Androids, like he's like, we're gonna crush them. Like he was going crazy. Like we're gonna take
almost in like a Trumpy way. Like Trump would, I could see doing that type of stuff where he's just trying to be threatening from a business standpoint. So yeah, like I just like comparing crypto now to Apple then, where like now Apple's so ubiquitous. Like you go down the street, 8 out of 10 of your neighbors have Apple products. Right here, like we're both on Macs too. It's like it's ubiquitous, and so I'm like people don't even understand what's going on behind the scenes at Apple in terms of like the technology. I think crypto's going to get to that point the same way where like you don't even know you're using crypto. You don't even know you're on a blockchain. You're just going to be on your phone or you're just going to be on your watch or whatever. So I see these parallels so clearly, but like I understand so many people have trouble and they're perma bears basically on the technology where like I still have people bring up to me almost every time I bring up crypto to them, they'll bring up like money laundering or like, things like that. And I'm like, there are documents.
No, you can go.
Like 1 to 2% of all blockchain transactions of like 2018 or whatever. Someone did a huge research report. It was like 1 to 2 to 2.5% of all transactions were like shady or illegal or like found to be used nefariously. And I'm like, okay.
Chainalysis did that.
Yeah, on Chainalysis you can find it. It's on the Etherscan. It's on the Binance Smart Chain scan. But then meanwhile, you'll have, I think it's like 10, I don't know the exact number, but it's like 10 or 12 years. JP Morgan's had like 300 billion in fines or like $1 billion a year in fine, or I don't remember the numbers, but they're money laundering every year and they're cornering the silver market every year. Like they just buy spot and sell short the future. And then they just manipulate it in ways like the Hunt brothers did or wanted to. So like with crypto, I've always been a fan, and like volatility right now is a feature. The markets are like inefficient and the derivatives are not as outsized as they are in equity. So like it creates this imbalance between the hodlers full time who keep like raising the price floor. Like this new $30,000 level, I think was like what 3,000 was for a long time. Where like there were enough hodlers at that time to always like hold that 3,000 level. Even in COVID, it hit 3,000 or so, and then it never went back down there. And
it dead cut bounced off of it and is just to the races.
It's kind of like with Amazon. They hit their low after the tech bubble. I forgot what it was. It was like 16 or maybe 74 or something per share, and then it never kept going down. It just kept going up. So like if you bought that day, it's literally only been up for you like until 3,500 wherever it's at now.
Question: How do you understand that? Okay, we just hit a bottom, or the neck of this dip of Bitcoin and the rest of the market, like that support level at 30K, and Ethereum hit that support level at 2,000, 2,200, like, or just crypto overall, right? Like, okay, how do you get people to understand that and have conviction? You can't teach people how to have conviction, but like, you
can also teach people to like deal with the drawdown. They just have to learn it on their own.
What's a drawdown?
So the drawdown is like, let's say you buy at 30,000 and it dips to 20,000, you're down what, 33%?
Yeah.
And
losses. Yeah.
Like if you buy SPY, it'll never ever go down 33% in like a day or a week.
Why?
Maybe because just the derivatives and the structure of who's involved and the fact that they have so much backstops in the Fed, and like even the New York Stock Exchange, if they wanted to, they could just stop trading. And they have their limits too on futures. I think it's like 5% up and down. So like if it ever goes up 5%, it's opening limit up tomorrow. And they're not letting it go higher or lower. And the same thing in the downside. So
what is a derivative?
So derivative, you got the equity spot. So let's say you got like the S&P 500 index, but then you have the S&P futures, which are derivatives of that index. And so you can trade them basically 24/7 or 24/5. You can't do it on the weekends. For now, but they actually just like a few days ago, I got an email saying that they're removing the 3:15 to 3:30 time, where they used to stop all trading just so they can do like reconciliation. And it made sense before because they had pits, so they had people like screaming out buys and sells at the end of the day, that they had to do all this reconciliation at that time. So now they don't have pits, it's all digital trading, so they just don't need that time anymore. So they just recently removed that, so now you have continuous trading 24/5 except Saturday, Sunday. I'm talking about for like equity index futures and commodities and whatnot. And it'll differ from exchange to exchange, because like if you're on the Dow, I'm pretty sure you're on CBOE, but if you're on like S&P 500 futures and NASDAQ futures, you're on CME. So you got to pay different fees for the data. You also have different rules of like just the times that you're able to trade. So it's all pretty complicated actually. Like it's more complicated than it needs to be, but there's a lot of moving parts. Like it makes sense for like people always talk about shorts nowadays and how the shorts are bad in equity markets and things, but it's very obvious to the people who know that the shorts are good and that they help maintain like the health of certain things. They don't let it get too frothy. But yeah, I don't know. So that's kind of a long way to just say I'm all about crypto. I think like there's plenty of broken centralized idiosyncrasies within like the equity markets that are just infinitely backstopped by the Fed, no matter what happens. So that's like the reasoning why I don't think SPY will ever go down 30% in a week, but like Bitcoin might, because no one's in control of it. Or, you know, if Bitcoin does that, altcoins might go down 60% that week. Like they're almost like leveraged tokens reflecting Bitcoin's price sometimes.
Yeah. Will Bitcoin and the crypto markets ever get more mature to where you're not seeing those drawdowns and 50%, 100% gains in one day?
I think there will always be some of that, because there will always be new tokens and there will always be new technologies that are trying to be innovative and cutting edge, and the market won't know how to react to that all the time. And like I was saying with Apple, it's like the volatility is a feature of an unproven technology. It's not a bug. And like you're asking with a derivative of like Sam Bankman-Fried. Actually, I saw this on my LinkedIn profile because you commented on it, where Sam Bankman-Fried was going on a podcast, and he's talking about like he's not really worried about the regulation on crypto as a whole. He's more worried about the lack of regulation and a framework for the derivative markets in crypto, because like he's, I think, aware of the outsized effect that it has on the spots markets and equity. Where like I think if like the GameStop and AMC stuff, like that is just this like reflexive effect of having too much derivative power, where like you buy calls and the market makers have to buy the shares to hedge against you because they're short the calls on you. So it just creates this reflexive, like impulsive move up that like that's the gamma squeeze. And that's just like an effect of the market structure at hand. And it's not really like this natural price action. And so like the derivative markets in crypto are just not like, you'll have 10 different exchanges, you'll have 10 different Bitcoin prices and premiums and arbitrage opportunities that are just not existent in the centralized equity future market.
Is that a good thing that it's so separate in different prices?
I think it's interesting because it's almost more pure, because you don't have all these moving parts around it that are artificial, in the sense that like you don't have the hedging games, you don't have the speculative games that are happening in derivatives and like they do in equity. So your question about will it ever not, like will the drawdowns like be smaller and the volatility shut down? in crypto, and I don't know. I can't answer that because it's hard to say. Like right now, I don't really understand why we have so many different derivative prices of the same Bitcoin futures contract or the same perpetual futures contract. That might be a better question for an exchange engineer. So yeah, it's hard to say where the future of crypto derivatives will go because like just recently China banned leverage, I think, and derivatives are all leveraged. So
Yeah.
we'll see.
Yeah, you saw a lot of leverage come out of the system in the last 4 weeks. I think that's what was happening.
What do you think of the accusation at Tether that Tether is just like holding up the Bitcoin market, where it's not actually 1-for-1 US dollar. It's just like they take the US dollar and then they go and buy Bitcoin.
I feel like they would have come out about that already. I'm like, that might be smoke and mirrors potentially. I'm not saying I'm correct. I just feel like it's noise. I think USDC, US dollar circle, the company circle for everyone. They're a stable coin. They are the leader in that space. Tether, I don't know much about them. I just feel like that's noise. If something comes out eventually, like kind of like Ripple is weak. Like, yeah, Ripple has their controversies because their owners are holding so much of the tokens. But as a stable coin, I'm not sure. I'm not sure if like that's real or not.
Yeah, with stablecoins, it's really interesting where like every time you go on a top 10 list of crypto or top 20, like 2 or 3 of them are stablecoins. You got
A lot
Tether,
of
you got USD.
we're in the top 10 now, I believe. Let's check.
Part of the top 10.
Let's check it.
Do you check on Coin Market Cap?
I'm a Gecko guy. I'm a coin.
Gecko, really?
Yeah.
I kind of like the interface on Coin Market Cap more.
Yeah, for sure. I just been following the Coin Gecko King. That's just the first one I got exposed to. You got Tether at 3. Yeah, it's just Tether and USDC. Let's check.
Oh, really? Oh yeah, those two. Well, another really good one I think that a lot of people use for perp trading and futures trading in crypto, where they have Bybit, BYBT. You ever use that?
Yeah.
Yeah, it shows you all the open interest across different exchanges, like for each currency.
What is open interest?
Open interest is like are long, or if you're short a contract, then that's open interest. Yeah. Like it all sums up to the number of OI. So if you have like 5 people are long, 5 people are short, I'm pretty sure that's 10 open interest then. Yeah. Maybe it's 5 because you have a buyer seller, but I don't know. That's where I'm a little confused on the structure of derivatives in crypto compared to equity. Because when you're in equity, if you have 5 people short, 5 people long, it's not like the longs are long, like where the people who are short are selling it to them. It's like if you're short, you're selling it, you're borrowing it from the exchange and you're selling it back to the exchange. And then like the exchange is always the centralized counterpart. So you have no counterparty risk when you're trading in these futures derivatives. Mm-hmm. So yeah, in crypto, I don't know. It's just, you have a whole series of like these independent market makers who are providing liquidity, and it's kind of complicated. Again, like I'm not an engineer at an exchange, or I'm not behind the mechanics of an exchange. So I think I'm not the one to answer that, but it gets complicated and it's really interesting, I think.
Yeah, definitely. Yes. We're definitely getting really into the mechanics of the markets. I love it. What do you think about the investing space? Like the meme stocks, you see Forex trading getting really big in equities. You see crypto people coming in wanting to, make these ginormous returns because of the volatility, great risk, there's great reward. 100x coins, you see it's kind of quiet right now because we're going sideways, so people aren't as hyped. A lot of the newbies are checked out. What do you think about this? More like you got Public, the social trading app. Like it's kind of like how I see it is Web 2, really you had a voice, right? SoundCloud, YouTube, Instagram, Facebook, all this stuff, TikTok. Web 3 is like, oh, now everyone can trade. Everyone could trade derivatives. Everyone could, everyone has a voice financially. right? It's like this open source investing kind of. What do you think about the new landscape and the future of investing as a whole? Not just in crypto, but just everything.
Yeah, investing is, I think, changing dramatically just with the onset of the no commissions, and then everybody being able to do it from our phone, and then like the democratization of information that's getting spread out. So like you and I, we like 20 years ago, good luck looking up the open interest on something if you don't understand like how to operate E-Trade or something. I don't know. Like a lot of people, I think, got into investing maybe during the dot-com bubble, and then they got out when they lost a lot of money because they realized they should just buy SPY or something. So now with like this Web 3.0 thing, I think the creator economy is going to explode. Like what you talk about with the metaverse, I think that's like people are waking up to that real quick. And then in terms of equity, I can't really say. I do have somewhat of a prediction. I'm a little bit extreme here, I understand, but like if you think about it, really, it's not that extreme. So I think NASDAQ will hit 20,000 this year. It's at almost 15,000 right now. I think we're going to tech bubble 2.0. I think Tesla's going above 900. It's old all-time high. I think Apple's continuing to go up. Amazon, I wouldn't be surprised if it's at 4,000 soon. And all of that's like FANG and Tesla is all like 45 to 50% of NASDAQ. I think NASDAQ is only like 30-something% away from 20,000. So like people were wearing Dow 10,000 hats a long time ago, and then Dow 20,000. Now we're at like Dow 35,000. I think NASDAQ's going to 20,000 like sooner than people think.
I remember this guy on this podcast, on this show called the X22 Report. He was a trader or whatever. He was saying that Dow was going to hit 50,000. This was like in 2015. This dude was saying this in 2016, 17. And I was like, really? Because I was all like, it's going to crash. It's over. But like that, I guess to my question now, it's like, is that on a true, not like real returns, or based off nominal dollar? Like the dollar just getting weaker and we're getting inflated asset price inflation, but like on a dollar adjusted basis, basically meaning guys and ladies that, okay, just because the price of your house is going up doesn't mean it's getting asset appreciation. It just, the dollar is less, it's worth less. So is it
more dollars to buy that house than it did 5 years ago? Each dollar was worth more.
Buy that certificate of ownership of that stock.
Yeah, no, I think that's exactly what's happening. So like if you look, I have this one article on Medium where I'm drawing a lot from Raul Paul's thesis where
he's awesome.
Yeah, he's a good salesman. Yeah, he'd be great. He started looking at Bitcoin against all these other like charts, where he would look at it against the S&P 500, he'd look at it against NASDAQ, he'd look at it against like oil, but then he started looking at it against the Fed's balance sheet.
Yeah.
And you just see from 2008, the S&P 500 by itself, the notational number is higher and higher and higher. So the number on paper and the price of it is higher and higher. But the value of it in relation to the amount of dollars printed and that are on the Fed's balance sheet, like since 2008, it took like a nosedive with quantitative easing and the bank bailouts.
Yeah.
And you see that more clear than any other chart is when it's S&P 500 or NASDAQ against the Fed's balance sheet. You just see it goes from like 0.0016 or something to 0.0004. So it basically lost 75% of its value in 2008. And I'm not saying like we didn't lose 75% of our purchasing power, but like we're just precipitously rising up. I use that word in the article because it's just like this meandering up. Yeah. And that's the notational value, but like we're not even close. We're at like 0.0005 right now of like Fed's balance sheet against the S&P 500, for example. So it is exactly what you're talking about, where it's just more and more dollars to do the same thing or to buy the same thing.
Yeah. So like, okay, let's get straight to it. Hyperinflation, real inflation, 1970s. We didn't have hyperinflation, but it was a very inflationary time. We went off the gold standard, Fort Knox, all that stuff. We this time you think you hear the hyperinflation. I know you follow the Big Short, Barry, Michael Barry, legend. He went dark again, saying, "Hey, Weimar Republic," which is basically, guys, World War I, Germany. They were a leader, they were a killer, but they got decadent in their empire, and their what was it? What was their currency? The franc.
I don't know. Oh, probably no. I think
The
that's
mark or something.
I don't know that answer.
Do your research, look it up. But the Weimar Republic, they went the hyperinflation, carrying barrels just to buy a loaf of bread. And so we see some inflation right now. COVID was definitely an exacerbation of messed up supply chains. Supply demand was just all jacked up. And you're starting to see inflation. We've been seeing inflation in assets, but definitely in housing. Lumber was all screwed up. That's balancing out.
Groceries for sure.
Groceries for sure. Meat for sure. Meat, like the meat here was like, what the freak like is going on? Gas prices are going up steadily, good 10-20% in some places.
You look at oil since like October, it's like doubled in price, I think.
Yeah.
And then when you do that, like people talk about like gold going up $10 or $40 or silver going up $5, which is huge actually. But
yeah,
silver's only $25 for like the ounce or whatever. I'm thinking of the futures prices. So like if it goes up $1, that okay, it's like like all the futures contracts are leveraged, so they're all going up like way more than $1. Whoever's trading that is doing decent. But like the companies, like a gold company, they might not be profitable when gold is $1,750, just based on their cost of mining in certain areas and things. So if gold gets to $1,800, $1,850, like what if that's like, let's say $1,750 is their break even. So everything above that is just like money right above $1,750. And then let's say it goes to $1,900. Now they're just like, they're levered to the hilt basically, because they're like, everything is, it makes sense for them to just like borrow and mine.
Yeah.
Like there's these mining royalty firms where they like give you all this money, but they get the royalties of the mining, like the whatever you get out of it.
Yeah.
So like you'll see gold stocks during a gold run go from like 10 cents to $15 or $20, and
because the futures are there, the futures contracts.
Well, like the price of gold, I'm just saying, is just like not reflective of like the actual value of the industry when it goes up. Where like if gold goes up 20%, like some of these mining stocks might go up 300% because they're so levered in the price of gold. Yeah. Same with silver, same with copper and all that. Yeah. Like there's so much crazy boom and bust cycles in commodities. I started paying attention to it when I heard about Marin Katusa. Have you heard of him?
Who?
Marin Katusa. He has his own firm called Katusa Research.
Yeah, he's been in the space. He's been like a leader for years. Yeah, I've been following him for a long time. Yeah.
Yeah, I follow him. I listen to a lot of his podcasts, and I've read this one. You what?
He's entertaining. Like you just tell he loves what he does. Like he's really.
He's so like. He kind of reminds me of like a non-funny version of Anthony Jeselnik, where he's just like brooding and dark, but. Very smart and knows exactly what he's talking about.
He's been in space for like 2 decades. Like wow, he's been like.
Well, you know the story. He started as a calculus teacher.
Yeah.
And so he was in Vancouver. I can't remember the like. Maybe it was calculus, maybe it was chemistry. I don't remember exactly, but he found tungsten is what it was. So tungsten are like the filaments in these light bulbs. Not like this one I have here, which is I think LED or something, but like tungsten is the little shaky stuff I think that's in there. Yeah. For some reason, he did his own independent research while he was just a high school or something teacher, and he just mortgaged his house, like took a second mortgage on it, got some massive loans, had all his savings, put it into tungsten stocks, killed it, like came out of it a multi-millionaire, and then just kept doing that. And now he's like, he has his own thing now called like the Katusa Warrant, where he just gets in super early because of all of his connections in the precious metal industry. So he gets in super early on something, and then they created this like financially engineered this new thing where he gets like a certain vesting schedule on his warrants. And I don't know all the details. He talks about it more in detail in his own interviews, but yeah, he's a monster in the precious metal space. I'd love to work with him one day or invest, because he has I just got to subscribe to him because he lets his own investors in on these Katusa warrants with him. Yeah, so like you get in at the price that he gets in at. Yeah, I don't sound like I'm shilling him now that I think about it, but I just think he's cool and a unique investor out there.
You definitely gotta get him on board, man. Finally reach out to him.
Well, I actually did reach out to him where I only got in touch like maybe with his assistant or something, but I heard the story of Warren Buffett like offering to somebody, I forgot who, like the guy who wrote some famous book, but he offered him to work for a year for free just to learn the tricks in the trade of stocks back in the day. Yeah. And the guy accepted it, and he did do a whole year of working him for free.
Yeah.
But like Buffett had some family help during that time, so they helped him get by, I think. And so I actually messaged and like emailed and tried to call them and do the same thing, and it never went anywhere. But I did the same sort of offer where I was like, Marion, I'll work for you for free.
Yeah. But scrappy. I like it. I feel like that's the same kind of reputation that everyone that comes on to break into the future kind of has. It's just curiosity, scrappy. I mean, to be in this space this early, you have to be curious. Especially
the guy I listened to who created Hashcash, I forgot his name, but he was on the podcast just before me. I was really impressed with him. He had like started a bunch of businesses. Sold a bunch of them. He's been scrapping since the beginning. It sounds like.
Yeah, I came from India. American story. Definitely reach out to him and tell him I sent you. And I was thinking when we first started talking, like just to have like a break into the future, like network where we all just come together, like have community calls, just like have those. I mean, I'm sure everybody in the network is like pretty purposeful and has like lives. But just if it's on the calendar, we can talk like an hour and just 45 minutes and just like, figure out some way to build the community, the internal community of Break Into Future. And just like bring more guests on, have fun, like even create like an on-site thing and just like, have like build the network, build the community of like, people. So focus. Really, yeah, you can go.
Well, like we were talking about, it'd be kind of cool to have a directory or something on the website. Yeah. So like everybody an interview or everybody who is trying to get involved or is part of the Discord or something, like you can have a profile or something with all of your work on the website. With it's just all it's all there for everybody to see. Yeah. Almost like a blockchain explorer where you can like locate different industries and different connections that way.
That would be cool if you had a directory and you had a map. So like I think Raj is in India right now. So like if it's a US based company, PayBito is US based, but like he has people in India too. So he like goes back and forth between India and the Bay. So it's like you can see him on the map like India. You can click on his profile, like if someone was in like Singapore, like Chicago, Houston, and you like, hey, these were all of our network, like all of our leaders are all of our people that have been on the podcast and stuff. So we'll build it out, but I think that would be cool.
It could be cool too. Like we were talking about news things before the podcast, and a lot of where I get my news is newsletters, where I just keep up with the one project, and I might just skim every other newsletter or something because they do a lot of it. I can't keep up with all the projects and all the newsletters, but so I'll just like have it in the back of my head, and I'll see like different things are happening, or like A16Z just raised 2.2 billion or whatever. Like I see those things in these newsletters, so I'm staying up on it. And maybe if it was like a Break Into the Future newsletter where you had all these different projects, and whenever something new is happening, you just throw it in there.
Coming soon, yeah. If you look on the website, newsletters come in soon. I had it like 30 days, but we'll probably wait and do it like probably the end of the summer, just so like we could focus on media and content right now. But I thought about you maybe late last night or the earliest morning, whenever it was. I was like, man, maybe Zach could be a content, like a contributing writer to Break Crypto, and we could both write and break into the future together and just write.
Yeah, I think like there are a bunch of these little academies right now. Like there's like Binance Academy, and there's like Coinbase Learn, and there's like Coin Market Cap Learn or
Gemini
something like.
Two now.
Well, Gemini has Cryptopedia, which I think is more of what I'm trying to think about here, where it's kind of this index of things where it's like a short little article that explains a really complicated concept in non-technical terms. I think that's really cool because not everybody needs to know the mechanics of everything. It's like what we were saying, like the future is being on the blockchain without even knowing you're on it.
Yeah, and the different stages, like if you want to go deep, like we have that, but like most people are going to be on the fringes, like the first 2 levels, and then like it'll be less people on the way to the top, right?
Yeah, I think what also needs to happen is an explanation of like the problems with the current system, because a lot of people think that we might just be these crazy fear mongers living on the outside of
society. Yeah,
but like we're just yelling about inflation and all this stuff, and we're talking about like examples of hyperinflation like Weimar or Venezuela or something, but then people will be like, oh yeah, they didn't have the US industry and they didn't have US military that like defends the value of our dollar and everything. So it's a very nuanced conversation, I think. But like what I was talking about earlier, I don't know if we were recording at this time, but with the derivatives and the equity markets, they are so like reflexive, and the market makers are hedging against you in a way that like just the gamma squeeze is a perfect example of it, where like I buy a call, you sell me, you're short a call, but you're also buying spot to hedge against me. And
it's a zero sum game.
It's zero sum, but it's like it's directional in a way that is artificial, because you have all these mechanics of market structure like infiltrating like the buying and selling, like the intentions of the buying and selling. And like I'm saying, reflexive is just the best word. George Soros talks about that all the time, where markets are so reflexive. He goes way more philosophically into detail than I am right now. But so like that's a problem, and that needs to be dealt with, I think, or that needs to be like mitigated in a way that it's not now. Like also FINRA, like they're the ones who just did the $70 million fine to Robinhood. And I'm like, okay, so what Robinhood did bad was like poor communication and the shutdowns during the GameStop thing. Like that's what this fine is about. But then the money is going to FINRA, which is a SRO, a self-regulated organization, which is a non-government entity that has people within the industry. So there's people from Morgan Stanley, there's people from Goldman Sachs who were like on the boards of FINRA, who are deciding like, yes, we need to do 70 million, not 69 million, not 71 million. We need to do $70 million fine. We need to put Robinhood in their place, and we're going to get all that money. But I'm like, you're not the one who lost money on this. It's like the retail investors who were involved in GameStop have been involved in Naked and all these meme stocks. Like they're the ones who lost money. Like why does not 70 million get sent to them? Like in DeFi, for example. I was yield farming on Pancake Bunny. It's not the greatest name, but it's on Binance Smart Chain.
It's called Pancake Bunny?
It was. So there was it's still there. They used to have like 6 or 7 billion total value locked. It was insane. And now they have
right?
What?
This is not PancakeSwap, right?
No, so PancakeSwap is like the real deal, the best DEX on Binance Smart Chain. Pancake Bunny was like this yield aggregator, just kind of built off PancakeSwap. Like they even talked about, like they have their own Bunny token, and then PancakeSwap has its cake token. Pancake Bunny was like, there's some line on their website saying that it was like built to help you maximize your yield cake.
Oh my gosh.
It was something like that. But they also let you get yield on like stable coins and a lot of really interesting, like the Binance token. You can get yield on that. pools and things.
Yeah. So
they have less than $1 billion total value locked, but they had like 6 billion when they got hacked. And so what I'm saying here is like this FINRA example is an example of like a centralized self-regulated organization that's not even like a government. It's just their own version of a government for one industry. They're deciding the fine on one of their industries that they're like in cahoots with Robinhood, the exchange. So they decide that they get the investors who were harmed for the reason for the fine, they get nothing. But then on Bunny, which the first one like I'm saying is like compare that to like like the esteemed FINRA, the esteemed Goldman, whatever, like I don't know. So in Pancake, they got hacked. They got like 200 million stolen or something. I don't even remember.
Yeah,
that's the investors' money. It's not like
it's real life, man.
And what they did is they created this pool that like if you had your money stolen from the pool and you could prove it, which you can do with transactions usually on the blockchain, you were given this other token as like a bounty, but like just a recovery sort of apology. Like that was their fine, kind of like that was their version of finding themselves, where they like gave value to the people who had money stolen from them. And like you're not going to find that in the equity markets. That was kind of a long way to talk about this comparison, but
yeah,
I'm just trying to like compare the two, and it's totally different.
Yeah. No, I saw it good, bro. This is awesome, bro. Like, that's like sometimes I just want it to like go however the conversation goes, like, but then if it's things that are kind of like very detailed, I want to explain it so people can learn and research for themselves and always be educational, always be learning, because this is about the 99% to teach them what the future is going to be like, whether it's crypto blockchain, electric vehicles, solar, robotics, AI, Internet of Things, teleportation, whatever deep tech, frontier tech, whatever, even even poverty or just, emerging markets, everything. And so I want to be able to teach people. We're focused on this season 1 of crypto blockchain. We might do it through the rest of the year and start something else, but definitely we'll still have crypto and blockchain people on because we're knee deep. We're knee deep, and I see this bull run going through 2020 into 2022, just because you have institutions like those new support levels holding these levels.
The price floor, it's like the price floor keeps rising, like every cycle. It's just more people who start understanding and believing of how blockchains and crypto can affect the world. But it's almost interesting in a way too. Speculating. He owns some of the bigger coins, the things that I'd probably buy, but he will, like, his arguments are coming more so from like a regulatory standpoint.
Who are you speaking about? It kind of went out.
Yeah, so my brother, he looks at it more skeptically than I do. I'm actually kind of forgetting the point I was trying to make. So we'll move on.
Oh, again, no, the floor. Like the floor is rising, but your brother could be like, I don't feel so good about this optimistic viewpoint of crypto rising up potentially. Either it's my signal going low or is crap. Oh.
Yeah, so I think with every cycle, we've seen the price floor just go higher and higher, and that just is like evidence of people believing in the future of this technology. But at the same time, it's evidence of the hodler count rising. Like all the on-chain metrics are showing like the more and more wallet addresses are holding more and more tokens, and it's interesting where like this is an asset that like I guess it's not that much different than Apple actually, but like we were talking about earlier, but it's an asset that like 50+% of people are just hodling. Like they're not holding, they're hodling. Like they don't want to sell it for X amount. Like what is their price? I don't know. Like what is Michael Saylor's price that he's holding it still. Like, I don't even think that he has that in his head. He just
he doesn't even care. He can go underwater.
Yeah, this is just a directional bet for him. Like, he just sees it's going up. He'll buy it at 38. He'll buy it at 41. Like, whatever.
Yeah. He doesn't care if he goes underwater. He's like, I'm liquid, so it doesn't matter.
His numbers were insane in the beginning, where like MicroStrategy is a software company. They make like 40 million or 50 million in revenue every year, I think, and that's revenue, not profit.
No, they make closer. They're in the 9 digits. Let's see. They're public.
Yeah, you should look it up actually. But what I remember just looking into it when he did all that stuff at the beginning, and I remember like if they're making 40, 50 million a year in revenue, and then they bought in at like, I don't know, 15,000 or 20,000 or something, like their average price is like 26,000, I think, or 24. Like if they bought in there when we were at 60 something thousand, they had like 30 years of revenue just from profit on their Bitcoin investment when it was at that price.
You could have sold and been good.
And just bought back, but would have nuked it.
Yeah, they did under $500 million last year.
Okay, maybe I was wrong.
I mean, they've been pretty stagnant for a while. They've been pretty stagnant last 5 years.
What are you looking at that on?
I'll send you the link. It's on Market Watch, just like simple financials.
Yeah. I don't know where I got that 50 million. I must have just forgot a zero. But still, it's like if they're making 2 billion off of Bitcoin in a few months, like that's 4 years of revenue for them right there. I thought they were going to lead a trend of more corporate balance sheets to pick up Bitcoin, but it's really only been a handful that have followed suit.
Yeah, well, I'm about to send it. Where is it? Yeah, but it's interesting to see. I would love to interview him. Who doesn't want to interview him?
Have you seen an interview where he's like, "There is no second. There is no second."
I haven't seen that, but I heard about it.
It's funny.
His logic is great. I would love to like be a devil's advocate on his bullishness on Bitcoin, and just like go like not go at him, but just challenge everything, and so he could answer those questions for people.
Yeah, he's looking at it like my perception of him. I remember when he first made the purchases when I first heard of him, and I started watching this video series he did with Robert Breedlove, who is like a reformed maximalist, where he used to be a maximalist, and now he's like, you know what? Some of these altcoins are okay. Yeah. And but Michael
Pumps, yeah, because he's making investments in other companies that like support altcoins. So it's like you can't be a maximalist.
He's saying he's doing that, but he's saying he's like maximalist though. So he's kind of like follow the money, bro. I don't know.
Yeah, don't be Jamie Dimon. I would interview Jamie Dimon too. I don't care.
Oh yeah,
we're all
human. I'm gonna connect you with him.
Yeah, thank you.
Recently, I was in the Chase building because I still bank with Chase. Like, sorry to say, but not all my money is on my MetaMask or anything.
Yeah, no, I'm not fully crypto. I still have Wells Fargo for now.
Yeah, here we go. So Wells is probably cooler, but also I was in the Chase building in Chicago recently, just like depositing stuff, and I was like, it reminded me of the scene from The Big Short where the guys go in and they're like trying to get funding from the upper level of some New York City Chase building.
JP Morgan Chase.
Yeah, and so it just reminded me of being in like that situation, but I was not in that situation. But it's like that; those buildings are so powerful, and they are in control of so much. It's like kind of disgusting. Like that's decentralized as finance is, and it's way more than it should be.
Yeah, man, it's crazy. But okay, what do you see? I think like you have like the pendulum, right? You have on the right, the far, like you said, the Bitcoin maximalists are like people who are just like super sovereign, laissez-faire, anarchy, libertarian, whatever that scale is. And you have like people who are just like, no, no regulation. We don't need Bitcoin. This is not real. Whatever. Whoopie whoop. I'm super against it. Elizabeth Warren, whoever's on that side. Then you have like, okay, CeFi and DeFi will work together. Centralized finance, old traditional finance, and new decentralized finance, crypto, blockchain will work together. Where are you on that scale?
Well, from a regulatory standpoint, I'm not entirely sure where I stand on there, but from a market structure standpoint, I see CeFi and DeFi working totally fine together. I think they can exist together concurrently with no problem. I think there's use cases for private blockchains. I think there's use cases for public blockchains, and maybe some use cases, like some people are all about decentralization. I don't think that's necessary 100% of the time.
Yeah.
Like I was talking before this call, we were talking about this potential interview I had the other day where it's like an ICO governance platform, and like this is for new coin releases, and the idea is that smart contracts are in charge. You don't have the VC funders you don't even give them the ability to dump on the retail or anybody else. Like that's an example where decentralized, I think, makes sense.
Yeah.
But then centralized, like JPM or like JP Morgan Chase has their own blockchain. They have their own JPM coin, which is a stable coin.
Yeah.
I'm sure they have a bunch of use cases that make total sense to do that. Like I know Visa allows you to settle in USDC. I think that just makes the conversion from from crypto to fiat so much easier. And doing it within that centralized exchange system, like I don't know, I see it existing totally fine alongside DeFi, where a lot of people are like, oh, you're trying to destroy this whole established banking system. I'm like, no. I think people should still have their options of like going and get loans from a predatory lender. I think people should still be given the option of like refinancing their house through a bank. But at the same time, I think people should be given the option of like tokenizing their title to their house and selling it on the blockchain as an NFT. So like I see all the sides to it as making sense to me, but
yeah.
From a regulatory standpoint, I'm not sure. Like, how do you regulate a decentralized blockchain? Like, what are you trying to stop from happening there? I don't know. Like fiat onboarding, like that's one thing. Know your customer, AML type of stuff. Like, I don't know. That's where crypto exchanges are getting hammered right now. Like Binance. They're hurting in the UK. They got Thailand going against them. Japan is against them now. It's like,
do you think they could fall?
I don't know. Like, so when I was talking about Pancake Bunny recently, or a little earlier, and I remember seeing that on Binance Smart Chain and just being like amazed that like this platform with a silly name and a silly bunny token, like the bunny token was like $170 at one point, or maybe more. I don't know. And it dropped to like $13 or $10 or whatever when they got hacked.
That's not volatile. That's just.
Well, that's a rug pull. That's different, but or not a rug pull.
That's just a freaking collapse.
Yeah, that's a freak accident. But I'm just saying, like that happening, like watching the total value lock go from like 6 to 7 billion to like less than $1 billion, where it's at now. I was amazed to see that. So I wouldn't be surprised seeing, like, if you look up right now the top exchanges, you got FTX number 2, Binance number 1. They might have $25 billion a day being traded. And I wouldn't be surprised to just see Binance's number getting smaller, even though I do like Binance. I used it myself in the Binance US app. I actually had the regular Binance app until they made me delete it because they had Binance for everybody, and then they now have their Binance.us for US citizens. So I
use it in Texas.
Really?
Mm-hmm. Nope. And I can't use Bybit either.
Yeah, I've never used Bybit, but I know Gemini Kraken. So they were based in New York at first, and then New York has this like bit license thing, which is a really complicated way of getting approved by the state to do exchanges. And so they hated it and they left. I don't know where they're based off now, but they're like, I don't think Kraken. They don't let you trade in New York.
They're in Europe.
Well, no, they're in the U.S., but they're not in New York anymore.
Oh, Kraken headquarters?
Yeah, because they left New York because of
They're in Europe.
Well, maybe they left to Europe, but they started in New York.
Oh, San Francisco.
That's where they're at now.
Let's see. San Fran. Yep.
So with Gemini, they did get the BIT license. Like Gemini is a company who are all about asking for permission rather than forgiveness, which is probably the right way to go about it.
Because it's a long game in crypto, man. You're utterly evolving the stack, the software stack, right? Like this is infrastructure build. You have to be tactical.
Yeah. So I was like with Gemini in particular, I know a little bit about them, but they have like 250 million daily transactions or something on their platform. And that sounds like a lot. Of course it is, but they're the 18th biggest exchange in the world. Like Binance is 25 billion minimum daily. They're, 100 times the size of Gemini in terms of their transaction volume.
Yeah, it's a lot of liquidity. Yeah. There you go.
But FTX though, I'm a huge fan of their exchange.
Yeah, getting Sam on here would be like lit.
I love Sam.
It's gonna get it. I mean, he's just like he's the total package. Like he's freaking genius.
Yeah, he's like. Well, I have this one note on my phone. It's like study genius. I have like some of my favorite musicians, and then I got like Sam Bankman-Fried.
Hey, I'm not hating on that at all. Yeah.
Like every interview I hear of him, I feel like him and Vitalik, I feel like are just on the same page of being on like the next level of decentralization, understanding and application, where things that they're saying now, I think like papers will still be being written about it 25 years from now or 40 years from now. Like now this is a huge jump, but like Einstein, like stuff that he talked about in the early 1900s, it's still like the gravitational waves thing, for example. That took like 100 years for that to come to fruition. Mm-hmm. And like Vitalik, like a smaller example of that, which it did not take 100 years at all. Like Vitalik's only 28, and Ethereum is only 6 years old, and look how much of an impact it's made. Yeah, maybe 9 years old or whatever. I don't know. Some of these numbers might not be exactly.
Ethereum?
Yeah, I think it's like 6 or 8 years old or something.
I think Ethereum launched in 2015, I think.
Maybe it launched, but I think he did something when he was 19. Maybe he started working in the Bitcoin magazine at that time because
he was trying to get on. He was like, "This isn't working."
Yeah, it was something like that. So I'm just saying. So he wrote an article one time about AMMs and the possibility of how they work, like the automated market makers, which are like a huge component of DeFi and all the DEXs out there. And all the yield aggregation places like Curve and Balancer and Compound and everything, those are all involving these AMMs. And so Vitalik wrote an article about it. And somehow a little mechanical engineer who self-taught coder named Hayden Adams came by and he read that article and he's like, this is a good idea. I'm going to see what I can do here. And then he created the AMM. So like it was Vitalik's idea, but it was created like in code structurally by Hayden Adams, who within I don't even know the time frame, but it was like he got 3 to 4 million users super quickly on the Uniswap. So Hayden is the creator of Uniswap. I don't know if I made that clear.
Uniswap is a freaking, people need to watch out. Uniswap is not playing games.
I know, that's the funny part where like Hayden got fired from a bank and then a few weeks later or a few months later or whatever, he creates Uniswap where it's like that protocol might make the bank that he got fired from obsolete in 20 years. Like
that's genius. Yeah. I see a major banking failure. Maybe
so?
Not in the US, but somewhere else.
How so?
So many people start to switch to different options. Neobanks, crypto, people start custodying their own money.
Yeah.
And it's just like some bank is not going to adapt.
Yeah. Well, I think one of the first things that's being dealt with, like Jack Mallers with strike and everything in El Salvador. He's already dealing with it. Like there's a bunch of activists out there who became crypto rich and just realized like the unbanked population of the world, or the underbanked. And the fact that the remittances industry is $500 billion a year of profit for banks, like estimated. So that's like
banks. Sorry.
So the remittances industry is like estimated $500 billion a year profit for banks. Now, what that means is like someone from Colombia or someone from El Salvador, they travel to the U.S. and they work these jobs that U.S. people don't want to work. And that's like working in the fields in like Florida orange farms or whatever. And then they make X amount of money and they have to send it back to their family at home, because the family at home might not have the same opportunity to make money. So that's called a remittance. And the banks just profit off of each one of those like transactions that cross countries and borders and everything. And so Bitcoin just completely gets rid of that. The only money involved to do that is the mining fee or the network fee on the Lightning Network, or for Ethereum, it'd be in Ethereum. So that's like one of the first things that I think are going to go. Like people talk about the obsolescence of the pickup truck drivers, or not pickup, but the semi truck drivers, because those are getting fully automated. I think remittances are going to be automated in the sense that people are going to do self-custody, and people are going to do these blockchain transfers that will just get rid of all the profit opportunity for the banks. Mm-hmm. And who knows what those ramifications can be for like these banks' balance sheets and their cash flow.
Yeah. Watch what they say. Watch what they do, not what they say. Mm-hmm. Yeah, it's the war, man. Where do you think we are in the next 5 years? Then where do you think we are in the next 10 years?
With crypto?
Yeah, crypto and how it's going to eat the world.
Well, like I was saying earlier with the investments, I think the creator economy is going to explode, and that might take 5 years. Who knows? Maybe longer. I think it's going to come in waves, like kind of cycles, the same way that crypto has been operating since the get-go of 2008, 2009. Yeah, so like right now, like we're talking about the sideways action in Bitcoin, and like obviously Bitcoin leads the market. I think in the next year, I was already saying, I think I'm very bullish on tech stocks and NASDAQ, and I think NASDAQ could easily get to 20,000, and that could be brought along through companies like Tesla, where like if Bitcoin price goes up, Tesla price goes up, MicroStrategy goes up, like all the mining stocks go up, and then I think like the equity markets don't know how to value the crypto companies, and
yeah, for sure.
There's companies. And more like they don't even know how to value the underlying crypto, so they obviously don't understand how to value the derivative company that owns the crypto.
Yeah,
like you can think of it as a derivative in that sense, but it's so I think more and more companies will get more and more into crypto, and I think crypto will keep going up in value, and I think these companies will keep going up in value because of that. And it'll be like this reflexive thing, and there'll be instances of volatility. Who knows? Plus 20, negative 20% a day, 40% a day. Like we've seen it before. So I think 5 years from now, like the whole influencer and creator economy will be different. The way people monetize their content will be different. I can't even start speculating as to how that'll happen. It'll just depend on the medium that we're existing in.
Yeah.
So, like BitCloud, it's its own medium, and that's a very unique way of monetizing yourself, I think. Like right now, you and I have our own profiles on there. We have our own coins, and it's interesting how like right now on Facebook, if you're commenting on a public page, your comment will pop up the highest, and more people will see it if you have more followers and you get more engagement, and it's like this algorithmic thing that's happening. But on something like BitCloud, your coin value will go up based on the quality of your content.
Yeah, it's merit based, not algorithm based.
Exactly. So I think that has a whole bunch of ramifications that we don't even understand yet in terms of like how people, or not necessarily how people ingest things, but how the things that they ingest get in front of what they're like get presented to them. I think that's going to change, and like what is presented to them will change. Like I think ads are going to be losing more and more value every year as an industry. Like you can't make affiliate marketing and all these like these ad-based revenue streams. You can't really do the same thing on a Web 3.0 blockchain environment. It's not built around that, unlike the internet, which has basically been built around ad revenue. And it'll be interesting because a lot of people say like the internet is this amazing thing, but all the money and all the brain power is going to these companies that are monetizing individual users like Facebook and Google and everything. Like I think crypto is this brain drain in the opposite perspective. So drain is not the right word, but it's like all the smart and powerful and not even just powerful, but like the 99% actually, but as well as the just like the smarter people who might have gone and worked as like a marketer at Facebook and they learned how to engineer every click that you make. They might go and do something amazing in crypto that they create something that makes them like they're able to monetize it in a way that's not exploitive.
Really valuable.
Yeah, so I think that's the direction we're going, where like there's more and more smart people and more money going into crypto every cycle. And this time, like we've seen a 10x growth from that price floor of 3,000 in March 2020 to the price floor of 30,000 now. Like, of course, we had this crazy fluctuation to 64K, 65K, or whatever.
That's normal.
That's normal. So it's just like you look at any chart, just think of it as like a fractal. If you look at the 5-minute chart, you see those crazy extensions that then revert to the mean eventually. Mm-hmm. Or they revert to some sort of channel that the price is operating within. And that just keeps happening on larger scales.
Zoom out.
Exactly. So, yeah, that's my 5-year guess. 10-year, I don't know. Just, I can't even say.
Auto
thing. 5 years.
Yeah, just keep on moving where the trend is going and try to beat it. But don't get too ahead or the wave will crush you.
Yeah. Well, that's the thing. Like one point that I think Raj is his name from the previous podcast. He made a really good point. I thought about timing as an entrepreneur.
Yeah.
Where you don't want to be right too early, because you won't be able to get the funding or like the access to capital and the access to people as if you were right at the right time.
Yeah.
Where like there's a whole trend happening, there's a whole movement, there's more hypeness happening in the air where people are ready to just. Like right now, crypto is in like 2 years ago. Like, what if you had the best idea of all time 2 years ago? No one will fund you. Right now, you get a $2 billion A16Z valuation happening. You know?
Yeah, right. Like, yeah, it's time. Blockchain capital, so many funds that they aren't even being like, A16Z all the press, but like, it's a lot of funds raised. There's just so many firms, more than that list I gave you.
Yeah.
There's more than that, but those are just the top 100 firms. So, yeah, man, it's exciting, and this was awesome, bro. Like, you're gonna break in like in the next month, at the latest.
Hopefully the next week. I got things rolling, but we'll see.
Right? Yeah, man. Keep me posted, bro. This was awesome. We're definitely gonna be working together, and just figuring out how to grow breaking crypto, breaking the future, and just how to help each other on life, man. This is awesome, bro. You're super. You're on the right path. And let's get it, man. So, you got any plans for the 4th?
Yeah, so I have some cousins I haven't seen in a while because I lived in Alaska for like a year, and then the COVID happened for like over a year.
Yeah.
So it's like I've been away from most of my extended family for quite some time. So it'll be nice to see them tomorrow.
Yeah.
And it's interesting too because I grew up in the suburbs, and one of my cousins bought the house I grew up in.
Well, that's cool.
It's like my house in a totally different context.
Yeah, that's cool. Keep it in the family ownership.
Yeah, a little bit.
Yeah.
How are you? What do you got going on?
I'm about to get ready to go to my cousin's house. It's raining pretty hard here. I saw them say, "Be safe in the rain." We're having a plentiful rain in this beginning of summer, but gonna go over there, hang out. Just have some cousin extended family time. Yeah, it's gonna rain for the next couple hours, but yeah.
Cousins are great.
What'd you say?
Cousins are great. They're fun.
Yeah. My cousins are like brothers and sisters. So.
You have siblings?
Yeah, I have a twin sister and an older brother.
Oh, twin sister? Is she into crypto too?
No, she knows about it. She reads the blogs, and
Yeah.
she better be watching the videos and podcasts. So yeah, my brother's into it because of me, and we ran a software company together. I'm not day to day anymore, but I'm still on the board and co-founder of Uzo, and so he's a CEO, a co-founder. So yeah, we're like super close. We're all close, so we're blessed, and yeah.
Well, how many years difference do you have?
Me and my sister, 3 minutes.
Well, you and your brother.
Yeah, I was joking. And then saw the thunder. And then me and my brother, 4 years and 9 months.
Because that's kind of an intermediate range. My brother is actually 7 years older,
Wow.
which was kind of insane growing up because I would be 5th grade, he'd be in 12th grade. I'd be in 12th grade, he'd be long gone outside of the house. So
Yeah.
basically, we're both only children.
Yeah. Yeah, right. That's cool though. Y'all are pretty cool. Y'all are pretty close.
Generally.
Yeah. That's cool, man. That's nice, man. Well, you enjoy your cousins, man. I'm enjoying my cousins.
Mm-hmm.
We'll be texting.
All right. Sounds good.
All right, man. You have a great one. Happy 4th. Fighting for freedom still. It's an ongoing thing, right? We're a young country, right?
Yeah, we got time.
Yeah, definitely, man. Well, we'll talk soon.
All right. Peace. Yeah.
Later, man. Hey, you already know what it is. Zachary Roth. I didn't ask him where we could follow him, but I already know his stuff. So you'll be able to follow him on his Medium, Twitter. I'll put his LinkedIn in the description below and in the podcast. Hey, love you guys. Breaking in the future, all things crypto, blockchain, electric vehicles, cannabis, IoT, AI, robotics, IoT. Yeah, I said it already. Let's love y'all guys. Let's go. Peace.